Success is 99% failure. Soichiro Honda. And what Mr. Honda means there is that we have got to practice, and learn from our mistakes. That's why we talk about practice trading on a daily basis. 10 to 15 minutes is all it takes to learn how to read these stock charts, doing practice trades, filling out your daily market worksheets, your weekly market worksheets, studying the videos that we present to you for training every single day. And we have a great one for you today. It is entitled, Every Indicator Can Fail. And we want you to listen to it. How do you get that special training and all the other trainings we put out and we're about to put out? I'm saying sometime next week we'll put out the series again on options, the 3 options training videos that we have for you to start practice trading options. Oh, by the way, do not forget all of our Patreon supporters. If you're not a Patreon supporter, want to join in, would like to know more about being a Patreon supporter, I encourage you to follow the link in the show notes and go ahead and jump into it and become one. We would love to have you on the team. We're going to be having our live call-in this next Wednesday. It's going to be Wednesday, looking here on the calendar, that would be the 11th. Wednesday the 11th at 12:30 Eastern Standard Time. We will be having the live question and answer for all of our Patreon members. Go ahead and email us your questions. And again, great in-depth training we do live once a month with our Patreon supporters at any of the 3 levels. Depending on your level of Patreon support, hey, we'll give you a once a month 15-minute call. Call and talk to you about the things that you are most interested in all of your training and practice trading. We are happy to help in all those ways possible. We want you to practice. We want you to get this down. We want you to understand it. It is so fascinating. I do this every single day because I dearly love it. It is one of the joys of my life. It's great to put yourself up against the marketplace, against millions of other people, and against all the robots, the artificial intelligence, everything else that's out there. We have established and developed a system that trend follows. We're not looking for anomalies, inefficiencies in the market, trying to be day traders. We're looking to follow long-term trends and practice trade those again and again and again. Get better and better and better. Now let's jump into these charts. Don't forget, buy the book, Charting Your Way to Wealth. See the link in the show notes. What do we see going on? We see markets are up for the day as far as stocks go. Both the NASDAQ 100 and the S&P 500 up 0.20%. Bonds are down. Gold is up just a wee bit. What do we see happening as this week progresses, as we go through Thursday? Well, we see a red spinning top, means indecision, tending, and again, this is an open box top, so it's tending down, it's cautionary, okay, very cautionary, because it is an open box red candle, not a solid. And what do we see with the price percent oscillator? Slowing quite dramatically, going flatter and flatter on that weekly chart. Hasn't crossed over, still has a long way to crossing over, going down. Derivative oscillator has lost energy for the first time in 7 weeks. So again, we're paying attention to that. Price is still above it has crossed through so far. We don't call a candle until it's drawn, but it has pushed through both the 2-day and the weekly trend lines for that red spinning top. We go to the 2-day chart, and we do have a confirmed 2-day crossover going down. Of course, this latest 2-day candle represents Wednesday and Thursday. So what does that mean? It means we take our crossover line, what we call, there we go, we're moving our arrow, and we are moving the vertical crossover line itself on the 2-day chart over. We now have a bit of schizophrenia that is in effect. Why is that? Well, it's because the weekly, still in a confirmed up move. 2-day chart is now in a confirmed down move. We have also redrawn the trend line on the 2-day chart. Derivative oscillator's gone negative at the same time the price percent oscillator crossed over going down. That's important. We like to see the derivative oscillator and the price percent oscillator cross over. Typically, if they cross over at the same time, usually means a longer movement, a cleaner crossover. We look at the 4-hour chart. It is still negative, even though we've had 2 days primarily of up movement. We're just waiting to see sort of how things sort out now that the 2-day chart's confirmed down. The 4-hour chart is down. The weekly chart is still up. So we'll see how the market shakes itself out. And for those of you who get antsy when things aren't really moving a whole lot and the market's sorting itself out, keep your powder dry, my friends. Trading opportunities will abound in the future. Just be patient and wait for them. Wait for them. Wait for them. Part of the learning process is learning when to trade, when not to trade, when to jump into a practice trade, when not to. And you've got to have patience and wait for things to go your way. We had 5 great weeks with the Qs, and we had 4 great weeks with the S&P 500. So again, be patient. What do we see with the Qs right now? Well, red spinning top also, price percent oscillator flat, derivative oscillator losing momentum on that weekly chart. 2-day chart also had a crossover, so we shall move the 2-day vertical crossover line over. We'll also adjust our arrow so that when we look at it, we can cleanly see that it's in a confirmed down move on the 2-day chart. We will also move our trend line over and make sure this is how great TC2000. I see new people signing up all the time. Don't forget there's a link in the show notes for a $25 discount. If you sign up for the paid version of freestockcharts.com, that's TC2000. You will love it. The price percent oscillators crossed over at the same time, derivative oscillator, just like on the S&P 500. We go to the 4-hour chart. We can see things slowing down at the end of the day. Price percent oscillator is flat, just totally flat. Derivative oscillator losing downward momentum. Again, the price percent oscillator is still negative on that 4-hour chart, negative on the 2-day chart, positive on the weekly chart. So again, we'll wait for stocks to sort out, both the S&P 500 and the NASDAQ 100. Let's go to 20-year bonds. They were down for the day just a little bit. What do we see on the weekly chart? We have a solid red spinning top, almost a hammer. Long wick on top, shorter wick on the bottom, means indecision, tending down. Price percent oscillator is actually moving down again. It had been fairly flat over the last couple of weeks. It's moving away from the red signal line. Derivative oscillator still losing downward momentum. But again, confirmed down move on 20-year bonds. Go to the 2-day chart. It's still in a confirmed up move. We see that still confirmed up on the 2-day chart, although it does appear to be weakening. Price percent oscillators heading down. Derivative oscillator, first time in, let's see, it's been green and gaining momentum for the last 10 days, and it is now for the first time. After that, we have 2 days of the price percent, the derivative oscillator losing momentum. And basically, we've got 2 spinning tops, one after the other, again, tending down. So we'll wait and see what's happening. Again, remember, if this 2-day chart crosses over going down, then, of course, the weekly's already standing by waiting for that to happen. When that happens, get prepared for potential down moves. If it doesn't happen, then, of course, just wait and for the weekly chart to roll over going up at some point. We'll take our time, watch, see what there is to see. We saw down movement in the morning, bit of a recovery. In the afternoon, bonds still down 0.49% for the day. Price percent oscillator on that 4-hour chart still rocketing down. Derivative oscillator losing a little bit of downward momentum since it peaked back on the morning of the 3rd. So we'll continue to watch, see how bonds sort themselves out. Perhaps you might have an opportunity for more down trades with the weakening after 2 prior weeks of strong up movement in bonds. We'll see how that sorts out. Now let's go to gold lastly, up 0.06%. We have a green spinning top for the week. Indecision tending up right there on the weekly trend line above the 2-day trend line. Price percent oscillator not quite flat, still heading down. Derivative oscillator losing downward momentum. We go from the weekly to the 2-day. What do we see there? Well, the 4th day now of up movement, 2-day candles, but we notice this latest candle didn't reach the high of 139.57. It reached 139.45 that it did on the prior candle. However, it looks like, yes, it is a crossover on that 2-day chart moving up. Now, I will give you a caution. If things really start to rocket down because it's such a weak crossover, you could easily have that pull back through the red signal line. But for now, it is a crossover. I can see it. You can see it. We'll go ahead and mark that in gold, which takes us out of a gold trade unless it bounces off and starts moving down. So do pay attention over the next few days. 4-hour chart is continuing to climb up a little bit. Price percent oscillator heading up. Derivative oscillator losing momentum. Is important to note that as far as gold goes, it hit its high all the way back on Tuesday morning. Hasn't gotten, I don't believe it's got up to 139.45, 139.57, so close, but hasn't hit the high that it hit on Tuesday again yet. You can see that in the derivative oscillator, how it's losing energy, and the price percent oscillator not heading up at the same angle it had been the prior day. So we'll continue to watch, see how gold sorts itself out, see how bonds sort themselves out, see what happens with stocks now that you've got the 2-day in one direction, the weekly in another. We'll just let things sort themselves out. I hope you'll take that special training we have for you today. Hope that you enjoy it. We always love to get feedback from you. Please make sure on the bottom right hand of the screen, if you are watching the YouTube video, to subscribe if you're not already subscribed. And we also love your comments. It helps us with our metrics. Every indicator can fail is what the special training today is all about. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.